Hey, Counting One, just a quick video to help some of you that may have missed some time or missed a day or whatnot in chapter 16, okay? So I just want to walk through a little bit of the chapter 16 application. Let me know if you need me to share the document that I've got on my screen with you. Some of you, I'm sending this video in an email, so I'll share that with you as well. All right, so we're looking at some end of fiscal period work, and I think this is one of the most relevant things in accounting is preparing financial statements. So what you see on my screen is you see an adjusted trial balance. So basically, where we're at now is we've journalized, we've posted, we've done our adjusting entries and posted those, and this is where we're at. Okay, this is how much cash we have. This is how much petty cash we have at the end of the year. All right, so there are a few things that we're going to go ahead and take a look at. First of all, income statement. A lot of you guys started this already, but let's just make sure that we're straight with how this works. This is basically a lot of linking, okay? This blue area right here that I've highlighted blue, if you were in class with me, you know that I said this is the tricky part, okay? So if you want me to talk you through that real quick, that is what I'm going to be doing. As far as sales go, we're going to grab the like raw data, the sales from the adjusted trial balance. So down here, I'm going to grab from line 36, I'm going to grab some sales, okay? And then I'm going to subtract out the things that take away from my sales, which are the discount and the returns, okay? So let me go ahead and move my face to another place there so you can see my screen a little bit better. I'll go ahead and increase the size. There we go. So, all right, for income statement, you can see that I linked back and forth sales, and then I linked my discount and my returns to the adjusted trial balance. Okay, so these two numbers got linked. And then I added the two numbers in column G and put them in column H. And then this is a less. So I'm going to take 557 minus 4,000, and that equals my net sales. Net sales, again, are the amount that's going to be compared for our component percentages. So for this first one, it's net sales divided by net sales. The next one is going to be gross profit divided by net sales, to be 46.4%. And then I'm going to take expenses divided by net sales to get the 53.6%. Okay, so use that as your denominator when you're figuring out column J. All right, now the blue part. This is a little tricky, okay? We are going to take a look at, first of all, we have to find this first number in the book, okay? So in class, I read it to you. In the mastery, it's pasted next door in the book page, okay? So you've got to find the beginning inventory either from the textbook or from the general ledger or wherever you can find it, okay? So I typed this number in. This is the only number I'm typing in. Everything else is going to get linked in this financial statement. So I've got my given beginning inventory. I'm going to then link my purchases to the adjusted trial balance. So line 39. And then I'm going to do the same thing that I did for sales up here. I'm going to list the two accounts that take away from purchases, the discount and the returns, add those together, put them in column G, and then I'm going to do a subtraction. Okay. Once I've got that, these two numbers are super important. This is how much I began the year with as far as inventory. This is how much I bought during the year in inventory. When I add the two together, that tells me how much I could have available for sale if I sold nothing throughout the year. Okay. Now, when I subtract the ending inventory of merchandise inventory, okay, that's going to give me how much I sold. So what I had was 344. What I had left is only 88. So that means I sold the difference between the two. Okay, so this 88,142.54 comes from the adjusted trial balance. I wrote that in here for you. It's way up top. There it is. Merchandise inventory, 88,142.54. Okay. All right, so that is the tricky part. Now I'm in column I, and I can take 553,249.81 minus 256,816.82, and that is my gross profit. Okay, so gross profit, super important number for our managers for financial reporting. Yeah, it's gross profit. Okay. Next section is fairly simple. You can see I copied and pasted all the expenses from my adjusted trial balance in here. The only ones I did not paste were Fed income tax expense because that's listed later. Okay, so when I go to my adjusted trial balance, I grabbed line 42 with it, which is advertising expense, through line 54, which is utilities expense, and I copied and pasted. Okay. All right. Auto sum that column, and that's 244,973. I'm going to take my gross profit minus my 244. That equals 51,459.42. When I add in my income, additional income from interest, so notes receivable that is bringing in some interest maybe, I add those. Income means add, expense subtract. Okay, so we got income. That gives me 51,629, and then finally I'll take out my tax, which that comes from the adjusted trial balance as well, line 55. Okay, so all said and done, my net income after tax is 43,722.12. How did I get this 7.9%? I simply took 43,722.12 divided by line 11, which is 553,249.81. Okay, so that's a little review. We did the income statement a few days ago. Just want to make sure that you guys have that in there okay. All right. We also did the statement of stockholders' equity a couple days ago. So take a look at this. Again, these bolded numbers in blue are things you have to type in there, okay? If I did it for the application problem, make sure you do it for the mastery problem. When I multiply $25 times 2,000 shares, I get 50,000. When I multiply 300 times $25 a share, I get 7,500. Add those together. And then retained earnings, I left some notes. So please, please, please copy these into your notes as well. This first line, I'm going to get from the trial balance in my adjusted trial balances, okay? This one, I'm going to get from the income statement. I just calculated this number, okay? This income statement, whatever your answer is down here, is going to go into the statement of stockholders' equity on the net income line. And then the 17.2, that's also adjusted, linked to the adjusted trial balance. So add or take your net income minus your dividends. So this is how much extra we made. This is how much we gave out to our stockholders. So our actual surplus is 26,522.12. And then add your previous retained earnings plus your new retained earnings. And that tells you your current retained earnings. Add your stock plus your retained earnings, and that gives you your stockholders' equity, okay? This is super important. There's no number to check it with except if your teacher has the key or the answers, okay? So the purpose of this statement is to find this number, okay? So when we move on to the balance sheet, which is your next thing to do, we're going to put in the date and the name of the company. Before I do any of this top portion, I go all the way down and I fill in the capital stock, retained earnings, and total stockholders' equity from the new statement of stockholders' equity. So this 57.5 here, I linked to this 57.5 here. This 76.925.43, I linked to this 76.925.43. If you don't do this correctly, your balance sheet will not balance. Okay, so make sure you do it like that. And then I, of course, added them and put in my 134. Once I have this in, then I can roll up and start linking in my balance sheet numbers. Okay, so I'm going to grab all of this data from the adjusted trial balance. So if you want to watch me, I'm going to grab cash. I'm going to grab petty cash. I'm going to put my accounts receivable over here. And let me tell you why. Okay. Oh, my petty cash didn't land in there quite right. Let me grab that guy. Accounts receivable. There we go. And then uncollectibles go in here as well. Because see, what happens is we have accounts receivable of 16 grand, but we've got the possibility that 2001-07 is not going to get paid. So the true value of accounts receivable is only 14,850.67. That's also what we call the book value of accounts receivable. Okay, so this number here is the number that we're going to be adding. Okay, all right. Some people just never pay us back on time. So I'm going to just keep on keeping on. And as you go, let me just get these assets in here. Supply store. And almost done. I've got PPI. So some of them you can just grab. So I'm going to do 3 at a time here. And Google Sheets is a little different, but it works out just fine. Okay. Now, when you get to total current assets, you're going to put them over here. Okay. Don't forget these two guys. Okay. Don't forget cash and petty cash. So I like to use a formula and then add them. Okay. So now I'm in good shape. Okay. So I'll let you guys go ahead and work on the rest of this application on your own. This number right here on line 25 should end up equaling this number here on line 44. Okay. So those numbers need to equal in the long run. So you know you're right if you get those entered in properly. Okay, so I'll let you guys go ahead and rock and roll on your own. If you use my template, make sure, like I said before, make a copy of it and then go from there. Okay, or you can just copy and paste some of the data from mine into yours if yours doesn't quite equal. Okay, let me know if you have any questions or comments. I'll see you in class next time. Okay. Oh, here, let me give you guys a wave. All right, I'll see you later.